Som Seif. He's founder and CEO of Purpose Investments. Som, great to see you.
Great to be here, John.
It's an interesting point in the year. We see the big rally to start 2024, and yet we've still got a lot of these lingering economic questions. What are you making of it all?
Well, first off is, we had a wonderful Q1. I mean, markets, equity markets did better than most people anticipated when they came into the year, right? And people are still trying to figure out what was the premise, what's the principles, what does that mean, how's the momentum go into Q2? Earnings were really strong coming, from first quarter earnings, and so principally, there's a robustness. Markets, we're anticipating Fed rates cuts and all the rest of it. As we sort of look at where we are right now, I mean, the reality of the print on inflation yesterday. I think it's a little bit of a wake-up call to everyone that we've been maybe a little bit too overzealous on forecasting interest rate reductions, and the fair value of the long bond, the 10-year and the 30-year, probably have been under what they should be, and overvalued in my opinion. And so I've been saying this for some time. And I think we're just starting to see a little bit of that come into reality of the markets, that maybe the Fed isn't going to be as aggressive as everyone hoped. Maybe the economy is still got some lingering effects, and I think a lot of it is going to rely on what happens here as we enter earnings season in Q2 here.
Yeah, it'll be interesting to see what happens over the next few weeks. Something less tangible, though, when I'm sitting here and you're trying to get a sense for the markets, it does feel like we've shifted away from some of the fear over the economic unknowns that kind of dominated for a couple of years, and maybe this example of investors shifting their focus to earnings and just worrying a little bit less about each data point on the economy is something to consider as well.
Well, it's for a good reason. I mean, the economy hasn't stalled yet, right? And everyone's been calling stalling for a year now. And reality is earnings have been really strong, and GDP continues to grow. I would argue that the chirping on the sidelines that we're seeing from people like Jamie Dimon and others, that is look, even the banks here in Canada, the CEOs have been very focused on articulating a message that we're not out of the woods yet. And I think it's really important for investors to take caution on that. We still have a tricky situation. And I think this inflation print, it's funny, you go into January and, the print was a little higher and people said, oh, it's just a, anomaly, inflation's a little sticky, it comes and goes, it'll be up and down. February, a little over, and again, same thing. Oh, it's not a trend yet. March, that's 3 months now.
Yeah.
And at some point you have to say that this is not going to be easy. Anyone who believes that we always said getting inflation from sort of 7-8% down to 3-4% was probably easy. Getting it down back to 2%, the target that the Fed and Bank of Canada would like to get it to, is the sticky, really end state. And I actually believe we're going to be in a situation where inflation is slightly higher than where we may think, and could ultimately come and rear its head if we don't fix it. And that's why I don't believe interest rates are going to come down as aggressively as everyone would like them to be.
Yeah, I guess one of the specifics on Canada, some people will say, because of our mortgage market, because the sticker shock of higher interest rates is felt arguably faster than in the United States, that forces people to be a little bit more cautious with their spending. Maybe that pushes down the inflation story. We'll find out ultimately for Canada.
Well, actually, I'd argue that one of the trickier points is their economy is not as strong as the U.S. You're starting to see the tide, as the tide goes out, who's swimming naked is always a great comment. And Canada, relative to the U.S. is really, really, it's doing well, but Canada's actually got some issues. You saw it in the last couple of days when we saw unemployment rates go up in Canada and the U.S. go down. But the reality is that this is an economic challenge. And what the Bank of Canada likely is going to be facing is a different discussion than what the Fed is. The Fed probably has more time to make a decision. Bank of Canada probably is going to look to cut rates faster. Now, they were the first to raise rates. I don't see why they're not going to be the first to cut rates, but it's because the information coming out of the Canadian economy actually would suggest that they should. That could lead to, of course, a reduction in Canadian dollar and potentially an inflationary situation for Canada that could be different than the U.S.
Yeah, there's a lot of these moving connected parts that complicate the story on the economy and on inflation. Now, you're an entrepreneur, but you're also tied into the markets. One thing I've heard is that whatever happens with Canada's economy, which is definitely not as robust as what we're seeing in the United States, the fact that the Canadian stock market is at an all-time high is not because everyone's cheering the story of Canada's economy.
No, I think it's largely, I mean, some of it is the anticipation of, rotation into cyclicals, which is actually something we're very well tilted to. And it's actually one of our great benefits, but also one of our great, anchors, because it keeps holding us back from innovating outside of them. And so, oil prices, they're at highs again. And I think the movement from tech to commodities is something that we're starting to see a little bit of a asset rotation. That's going to benefit the Canadian stock market more than it will some other, the U.S. and other markets. And so I think that's one of the reasons why we're seeing that. But ultimately, Canada has to fix its economic productivity problems. We're seeing a lot more, rhetoric and conversation about that. We've got a lot of things around getting the immigration, numbers. We are a top decile immigration country, but we got to get the right people in the right jobs and right skills. All those things are really important things. And without it, and then we got intellectual property rights and intellectual capital rights have got to get figured out properly too. So I'm look, I think in the short term, the stock market might, outperform because of, the same and tried and true, but it may not be the reason why the economy is going to outperform.
Yeah, big stuff.